Welcome back to XRP Pulse, your home for the latest XRP news, Ripple updates, and the biggest moves shaping the future of crypto. Today, we are talking about a headline that has the XRP community fired up. XRP News. Brad Garlinghouse explodes on JPMorgan's Jamie Dimon. And yes, this one is not just another boring Wall Street debate. This is Ripple's CEO going directly at one of the most powerful banking executives in the world, live on Fox Business, and calling out what he believes is either a major misunderstanding or a deliberate attempt to mislead people about crypto regulation. At the center of this fight is the Clarity Act, a bill that could change how digital assets are regulated in the United States. But behind the legal language and political talking points, the real question is much bigger. Are big banks trying to protect consumers, or are they trying to protect their own massive payment businesses from competitors like Ripple and XRP? Now, let's break this down in simple terms, because this story is bigger than just Brad Garlinghouse and Jamie Dimon throwing words at each other. According to the article, Garlinghouse accused JPMorgan CEO Jamie Dimon of either misrepresenting the Clarity Act or spreading misinformation about it. That is a serious accusation, especially when it is happening on national business television. Garlinghouse is basically saying that Dimon's criticism of the bill is not really about protecting compliance standards or fighting money laundering. Instead, he suggests that the real issue is competition. JPMorgan is one of the biggest players in global payments, and it has a payments business worth billions. So when crypto companies like Ripple come in with faster, cheaper, and more efficient ways to move money across borders, that creates a direct challenge to the old financial system. And that is why this debate matters so much for XRP holders. The timing of this confrontation also makes the story even more interesting. While Garlinghouse was taking aim at Jamie Dimon, XRP was showing strength in the market. The article says XRP moved up about 1.8% overnight and was sitting around $1.14 after briefly touching $1.10 earlier in the week. Daily trading volume was reported around $1.66 billion, showing that traders are still paying close attention to XRP despite all the noise around regulation, politics, and banking pressure. XRP is currently described as the sixth largest digital asset by market cap, sitting near $70.8 billion, just under Circle's USDC stablecoin at around $74 billion. Some analysts mentioned in the article believe XRP could reach $2 before the end of 2026. Of course, nothing in crypto is guaranteed, but it shows that despite the pressure, XRP is still very much in the conversation. The Clarity Act is the center of this whole battle. So let's make it easy to understand. The goal of the bill is to create clearer rules for the crypto industry in the United States. Right now, one of the biggest complaints from crypto companies is that regulators have not given clear rules, but they still punish companies through lawsuits and enforcement actions. The Clarity Act is designed to divide power between the SEC and the CFTC. In simple words, tokens that are decentralized and more like commodities would be regulated by the CFTC, while other assets that look more like securities would fall under the SEC. For crypto companies, investors, and institutions, this could be a major turning point because clear rules mean less fear, less confusion, and more confidence for serious money to enter the market. That is why this bill matters so much for XRP and the wider crypto market. If the United States finally gives digital assets a clear legal framework, institutions that have been waiting on the sidelines may feel more comfortable investing, building products, and offering services around crypto. The article says the bill could also create fundraising thresholds for token projects and address the current problem where many people believe the SEC has been regulating by enforcement instead of providing clear guidance first. For XRP holders, this is especially important because Ripple has already been through one of the most watched legal battles in crypto history. So when a bill appears that could give tokens like XRP a cleaner path forward, the XRP community naturally pays close attention. This is not just politics. This could shape listings, products, banking partnerships, and institutional adoption. The article also mentions that a recent JPMorgan note suggested the Clarity Act could grant CFTC commodity-style treatment to several major tokens, including XRP and Solana. That detail is important because it shows why some traditional finance players may be nervous. If XRP receives clearer regulatory treatment, it could remove one of the biggest clouds hanging over the asset. At the same time, the bill has already passed a Senate committee vote and is heading toward the Senate floor. But prediction markets mentioned in the article only give it around a 47% chance of being signed into law this year. That means the situation is still very uncertain. The clock is also running because the US election cycle can slow down major legislation. So while the bill has momentum, it is not a done deal. And that uncertainty is exactly why the market is watching every move. Now let's talk about what Garlinghouse actually said and why it hit so hard. According to the article, Garlinghouse argued that Jamie Dimon is either misunderstanding the Clarity Act, which he called negligent, or intentionally misrepresenting it. Either way, Garlinghouse clearly believes Dimon's claims are damaging to the crypto industry. Dimon has suggested that the bill could weaken compliance standards, but Garlinghouse pushed back and argued that this is simply false. He believes the bill does not remove compliance responsibilities and does not create a free-for-all. Instead, it creates structure, rules, and clear oversight. That is why his criticism was so direct. From Garlinghouse's point of view, calling the bill dangerous or weak on compliance does a disservice to an industry that has been asking for rules for years. But the strongest part of Garlinghouse's argument is not just about the legal details. It is about motivation. The article says Garlinghouse believes Dimon's opposition may be tied to protecting JPMorgan's profitable business from crypto-native competitors. This is where the story gets very real. Traditional banks make huge money from payments, deposits, and financial services. Crypto platforms, stablecoins, and networks like Ripple can offer faster services, cheaper transfers, and in some cases, yield products that banks may struggle to match. That creates a serious business threat. So when a big bank CEO criticizes crypto regulation, people have to ask whether it is really about consumer safety or whether it is about protecting market share. Garlinghouse is clearly leaning toward the second explanation, and that is why XRP supporters are paying attention. JPMorgan is not some small player watching from the sidelines. This is one of the most powerful financial institutions in the world. Its payments network reaches across countries, institutions, and major corporations. Ripple, on the other hand, has spent years building technology focused on cross-border payments, liquidity, and faster settlement. XRP is part of that broader conversation because it has long been discussed as a bridge asset for moving value efficiently. So when Garlinghouse says Dimon is defending a payments empire, he is pointing to the heart of the conflict. This is old finance versus new finance. It is the traditional banking model versus crypto rails. And whether someone supports XRP or not, it is hard to ignore that this debate is about control, speed, cost, and who gets to own the future of money movement. The article also makes the point that JPMorgan is not actually avoiding blockchain. That is very important. Jamie Dimon has criticized parts of crypto many times, but JPMorgan itself has developed blockchain-related products and platforms, including its Connexus platform. So the issue is not that JPMorgan believes blockchain has no value. The issue may be more about which kind of blockchain innovation gets to win. If banks build private or controlled blockchain systems, they stay in charge. But if open crypto networks, stablecoins, exchanges, and projects like Ripple grow stronger under clear regulation, then the power starts to shift. That is why Garlinghouse's comments struck such a nerve. He is not just defending crypto. He is challenging the idea that banks should control the rules while also building their own competing blockchain infrastructure. There is also another angle here involving stablecoins and yield products. The article suggests that Dimon's frustration may also be linked to crypto exchanges offering stablecoin yields that traditional banks cannot easily match. For big banks, deposits are everything. If customers move money out of bank accounts and into stablecoins or crypto platforms because they can earn better returns or access faster services, That can threaten the banking model. So when the Clarity Act creates a clearer path for digital asset products, it could increase competition for banks. That does not mean every crypto product is safe, and it does not mean investors should ignore risk. But it does mean the conversation is not only about regulation. It is also about who gets to compete and whether the rules will allow new financial technology to challenge old financial giants. Now, let's look at the three possible outcomes for the Clarity Act and what each one could mean for XRP. The strongest bullish case is that the bill passes the Senate floor, survives negotiations with the House, and gets signed into law before the election window closes. If that happens, the market could see a major confidence boost. Regulatory clarity could unlock institutional capital that has been sitting on the sidelines because big firms do not like legal uncertainty. Tokens that receive a cleaner path under CFTC-style treatment, including XRP according to the article's discussion, could benefit from stronger exchange support, better institutional products, and less fear around compliance. In that scenario, XRP could get a powerful narrative boost, especially if investors believe the US is finally moving toward a workable crypto rulebook. The base case is less exciting, but probably more realistic to many watchers. In this scenario, the bill does not completely fail, but it gets stuck on the Senate floor while lawmakers argue over amendments. Banking lobbyists may push for tougher language around stablecoin rewards, anti-money laundering standards, and consumer protection. Crypto advocates may push back and argue that too many restrictions would weaken the whole purpose of the bill. If this back and forth continues, prediction market odds could stay around that 47% level or drift lower. For XRP, that would mean continued uncertainty. Ripple and other crypto companies would still operate, but the US market would remain difficult to navigate. Offshore markets could keep gaining activity, and traditional finance players like JPMorgan would continue to benefit from the lack of clear competition. The bear case is that the Clarity Act fails outright. That could happen because of active pressure from the banking lobby, political delays, or simply not enough votes when it reaches the floor. If that happens, it would be a major disappointment for the crypto industry. Without clear rules, companies may continue facing uncertainty, enforcement risk, and difficulty building products in the United States. Traditional payment networks would keep their advantage, and crypto companies may continue looking overseas for friendlier jurisdictions. For XRP, a failed bill would not automatically destroy the long-term story, but it could delay the regulatory clarity that many investors want. And in markets, delays matter. Money moves where rules are clear, and if the US cannot deliver clarity, other regions may step ahead. The article points to the 47% prediction market figure as one of the most important signals to watch. A drop of 18% in a week, as mentioned in the transcript, is not something traders should ignore. It suggests that confidence in the bill's momentum may be weakening. In crypto, narratives move fast, and regulation is one of the biggest narratives of all. If odds rise again, XRP and other major tokens could see renewed excitement. If odds continue to fall, the market may start pricing in another delay. That is why this Garlinghouse versus Dimon fight matters beyond the soundbite. It gives investors a window into the pressure building behind the scenes. Banks, crypto firms, lawmakers, exchanges, and institutions all have something at stake here. For the XRP community, this moment feels familiar. XRP has spent years at the center of debates about regulation, banking, payments, and whether crypto can work with the financial system instead of just fighting against it. Ripple has always presented itself as a company focused on real-world utility, especially cross-border payments. That makes Jamie Dimon's opposition to crypto legislation especially interesting because JPMorgan also sits at the center of global payments. So when Garlinghouse pushes back, XRP supporters see it as more than a CEO defending a bill. They see it as Ripple standing up against the banking establishment. Whether someone agrees with Garlinghouse or not, this is exactly the kind of clash that shows how serious the fight over crypto regulation has become. At the same time, it is important to stay balanced. This is not financial advice, and no one should buy or sell XRP based only on one interview, one headline, or one prediction market number. Crypto is volatile, legislation is unpredictable, and political timelines can change quickly. But as a news story, this is one of the most important XRP-related developments to watch because it connects price action, regulation, banking competition, and Ripple's long-term mission in one place. Brad Garlinghouse is making the case that crypto needs fair rules and that big banks may be trying to slow down innovation to protect their own profits. Jamie Dimon and traditional finance voices argue that regulation must protect the system and maintain strong standards. The market is now watching to see which argument wins.
So the big takeaway today is simple.
The battle over the Clarity Act is not just a legal debate. It is a power struggle over the future of finance. If the bill moves forward, XRP could benefit from a stronger regulatory story and renewed institutional attention. If it stalls, uncertainty continues, and big banks may keep their advantage for longer. Brad Garlinghouse's direct attack on Jamie Dimon shows that Ripple is not staying quiet while Wall Street shapes the narrative. And for XRP holders, this is exactly the kind of moment that can define the next chapter. Keep your eyes on the Senate floor, the prediction market odds, XRP volume, and any response from JPMorgan or Ripple. Thanks for watching XRP Pulse, and stay locked in, because this story is moving fast and the next update could be even bigger.